Hey everyone, welcome back to Corporate Decoder. Today we're diving into Pointe Homes' latest annual report. It's like reading a home builder's diary, but instead of secrets about crushes, it's about land deals, rising costs, and whether people can actually afford to buy houses. And trust me, there are some unexpected twists and turns that might make you rethink your next real estate move. Pointe Homes just dropped their Form 10K for 2024, so let's get into it. Think of this as their yearly report card to the Securities and Exchange Commission, or SEC, explaining how they did over the last year. First off, the big picture, they built and sold more homes, 6,460 homes in 2024, compared to 5,274 the year before. That's a solid increase in business. They are selling homes to a wide variety of people. Some are smaller starter homes and some are super expensive luxury homes. The prices they are offering go from about $230,000 all the way up to $4.3 million. One of their key strengths, according to them, is their experienced leadership. They highlight that their CEO and president have worked together for over 30 years. Basically, they're saying they know what they're doing. Pointe is focusing on areas where there are lots of jobs and people moving in, like Arizona, California, and Texas. They're even expanding into new areas like Salt Lake City and Orlando. The idea is simple: more people, more demand for homes. Speaking of land, they have a lot of it. As of the end of 2024, they controlled almost 36,500 lots. Almost 20,000 they control with options, meaning they can buy them later, and almost 17,000 they already own. When people want to buy a home from Pointe, they usually sign a contract and put down a deposit in cash. However, people can cancel the sales contracts and get their money back if they have trouble getting a mortgage or they can't sell their old house. To help people buy their homes, they also have a financial arm. It's called Pointe Solutions and helps people get a mortgage, title, insurance, and even property insurance. Now let's talk about cancellations. The rate of buyers backing out of deals has been about 10%, both this year and last year. This could be due to various things like the economy or interest rates. It's something to watch. They are subject to all kinds of environmental laws and regulations. They're talking about things like water management, protecting the soil, and air quality. They say they have to spend considerable amounts of money on environmental things, and it might even limit what they can build. On June 30th, 2024, the company's stock value was around $3.4 billion. Like many businesses, they face some uncertainty and risk. The results can change quite a bit during the year due to things like seasonal demand, the number of homes available, and even the weather. They also worry about raw material shortages. This means they might not get enough lumber or concrete, or the prices could go way up. If this happens, it could slow down construction and hurt their profits. They acknowledge that their construction depends on reliable contractors and subcontractors. They worry that changes in immigration laws and policies could create a shortage of skilled workers. Because they're in the home building business, they also have to deal with lawsuits. This includes construction defect claims. These claims can be costly, and sometimes insurance doesn't cover everything. In today's digital world, Pointe acknowledges the importance of cybersecurity. They mention the risks of data breaches and cyber attacks. They say they have a program in place to protect information, but things can still happen. They also have debt, and those agreements come with some restrictions. These are called covenants, and they can limit what the company can do, like taking on more debt or selling assets. Like many companies, Pointe depends on key people. They specifically mention the CEO and president. If those people were to leave, it could be a problem. The company has bought back some of their shares recently and might do it again, but they say there's no guarantee it'll actually happen or that it'll make the stock price go up. Okay, let's get to the nitty-gritty, the financials. Their home sales revenue increased to $4.4 billion, up from $3.7 billion the previous year. Their home building gross margin, which basically means the profit they make on each home, also increased to 23.3%. That's a good sign. They are in a pretty solid financial position right now. They had almost $700 million available under their credit lines and almost $1 billion in cash. Their financial services division did pretty well also. They helped more people get mortgages and that increased their revenue. Looking ahead, Pointe is optimistic. They say that employment trends and consumer dynamics are good, so they expect more growth. They do mention that higher mortgage rates could slow things down. For the money nerds, they generated about $700 million in cash from their operations, big increase from the previous year. Their total equity, which you can think of as the value of the company owned by shareholders, increased by about $300 million, going from $3 billion to $3.3 billion. Now, let's zoom out and see what this all means. Pointe Homes is definitely in a growth phase. The increased revenue and deliveries show solid demand for their homes. Their focus on high growth markets seems to be paying off. The company is in a stable financial position. The increased warranty costs could hurt profits a bit, and increases in interest rates make mortgages more expensive. They also have an increasing number of homes that haven't sold. These things could mean trouble. On the plus side, they seem to be managing costs and maintaining a decent profit margin. They also keep buying back their shares, which suggests they think the stock is undervalued. I expect the company to be biased on the positive side and emphasize achievements over risks like all reports tend to do. So where do we go from here? If they execute their plan, continue to expand into the right markets, and navigate those risks, I could see the stock trading in the $40, $45 range. Ultimately, I'm slightly bullish, but watching those interest rates and construction costs closely. If you found this breakdown helpful, hit that like button and subscribe for more corporate deep dives. Thanks for watching.